Hello traders, this is Rich Derrick from tradesight. Just want to take a moment and talk about the current technicals in Apple, and also talk about a very profitable long trade that we took at tradesight that was good for 20 plus points intraday, and at the close was $17 in the money from the suggested long entry. The last time that we had taken a look at Apple, we were concerned about this potential island formation, which is in this blue box here. As of the close on Wednesday, we had this huge range expansion candle to the downside that matched the breakaway gap low here. What this did is left the potential for some kind of a gap down here and then a drop, which would leave all these long buyers trapped in a position that's underwater and upside down. That was not the case for a couple of reasons today. We used our proprietary pressure thresholds to determine whether the stock was going to have the ability to open low enough to rebound back to the upside, or whether we expected it to open and to drop further. I'll talk about that in a moment. But first, let's take a look at what was happening with Apple leading up into this morning's opening. Now I've changed the chart to the 1 minute chart, which is a very minutiae time frame, but it's something that we actually use in tradesight because we have the advantage of using the seeker and the comber, which can identify important parts of the chart. So what I want to do here is explain what we're looking at pre-market. For the big liquid stocks like Apple, you can kind of get a feel for what's happening pre-market because there was enough trading. This is early in the morning, leading up into the bell. Here's the opening at 9:30 over here. But there was obviously this pretty good downside bias throughout the entire morning, with some very shallow bounces throughout the morning here. What they were doing was the market makers were continuing to press the stock lower here as the retail sell orders were piling up following yesterday's big down day. The stock was pretty much at the Globex, what we call the Globex low, or the pre-market low here, leading up into the bell. We opened right in this area here, and then continued to plummet lower in the first couple of minutes of trade. As we were doing that, we're just cascading lower here. I mean, this is $8 or $9 straight down, just trying to find demand for the stock. But we did find demand for the stock in this 520 area. That was very key, and that was something that we were hoping for, and we're thinking that could lead into a long trade if that area held. I'll change the time frame in a moment just to make that a little bit more apparent. But the two key levels that we're really focusing on was this 527.68 area, which is just below where they were able to get the stock down here pre-market, because that fills that open gap on the chart. Look at that in a moment. And then the other level we're looking at was this 520 level right down here, which is pretty much the low of the day here. So let me flip over to the 5 minute chart just to give you a little cleaner perspective. In the 5 minute chart, I'm going to take out the Globex session and just use the regular session data just to make it a little bit cleaner for you. Okay, I've just changed the time frames here again, but before I get to the 5 minute chart, let me show you the daily chart, so you can get a look at that gap again, and also get a sense of what the pressure thresholds were indicating to us. The gap that we're looking at here was this close right here, which is really key, which is 527.68. That was the area from which we had this breakaway gap back to the upside here, which was this impulsive rebound back to the upside after this really very aggressive decline. We pivoted off of this, made this move back to the upside here before rolling over here and falling back to the downside. But there's a couple of key features here I want to talk to you about. The red and the green lines that you see above and below the daily candles are tradesight pressure thresholds. This is a proprietary indicator that we use. It's maybe somewhat similar, I guess, to the pivot series, but it's calculated differently. We find it much more effective. What we're looking for is typically we're looking for trade to be in that range, within the range of the pressure thresholds. And when the entire day's trading is contained outside of the pressure thresholds, that's when we consider it a gap and go day or a gap and fail day. Here's the key inflection point. We had this hammer bottom on 11/16. The subsequent day, okay, we opened up. You see the expected range is to be back down in here, but what happened was we had this very aggressive gap to the upside that opened right at the upper pressure threshold. And when we open at the upper pressure threshold or above it and then continue higher, that's the very high probability gap and go day. That's how we have confidence that it is a gap and go day and not going to just be one of those days where, okay, it's gapping up, but it's gonna fill back in. So on these days, we're actually looking to the long side, and these days can be very, very powerful to the upside. And this obviously was very important and kept us off of the short side, looking for a gap fill, and got us looking on the long side. Now, if I can turn your attention a little bit more to the more recent candles, we started to break down here. We had this big gap. We had this day here, and this day was really key this week. We opened right at the lower pressure threshold. Never really could get any decent closes above it, and settled back down. The subsequent day was the really hurtful day, which was Wednesday. We opened right at the lower pressure threshold. Never had a 5-minute close above it, and that led to that big decline. Kept us off of the long side and kept us looking on the short side for that low close in that test of the gap window. Now again, here's your gap window right here. Breakaway gap right in here. That's a very key area. So on to today's trading. You can see we opened right in this area here. Here's the beginning. Here's the opening of the real candle, the real body. We did dunk down here like we had seen in the earlier shorter term 1-minute chart, just for 3 minutes. And we dunked down here, and where do we find support? We found support at the lower pressure threshold at 520 and a quarter to be exact. Never got a 5-minute close below it, and then we pivoted back to the upside. Had a very, very strong finish that we took advantage of. So the pressure thresholds led us to believe that there was going to be support in the 520 area, and led us to a very profitable long trade. And let me map out what that looked like and how we entered that. Now here's a look at the 5-minute chart, and this is what we'd like to switch to once the day gets going into the regular session. We can see we opened up here, just right in the area of that gap fill, but didn't quite fill it. We did fill it once price got going, and it looked like the gap fill buyers were filled and there was no demand, and price was cascading lower. But if you were shorting down in here, you had one problem. The problem was we had expected support right in this 520 area from the LPT. Now you can see this candle closed just above this area here. We closed at 520 and 3/4, or opened to closed this candle at 520 and 3/4, which was above the lower pressure threshold. So we never got even a 5-minute close below what we call the lower pressure threshold, or the LPT. So the LPT held price here, and when it did that, got us thinking on the long side. So when you're thinking on the long side, then you have to find a suitable long entry and a trigger. So with this in mind, what we used was a decent amount above that prior gap. That gap was 527.68 on the daily chart, which filled that old gap there. So we took a long above 530 right in here when price crossed back above 530. We just wanted to find just enough sufficient room above that key level at 520.68. So we used 530 for a round number, and boy, it worked great. Had a little bit of a pullback here, but you can see that this king and queen here, these two up and down candles, never even got to the midpoint of the range of those candles. After the trade triggered, proceeded to move up here, drove up to the static trend line, and finished in 9 bars up here on our 5-minute Comer count for a nice $20 profit. So this is a great trade that we actually got a little bit more aggressive with, which we can talk about at some other point. But it was very clean. We traded very aggressively to the upside. We were off the short side as soon as we went back above 530, and had a really nice long trade. I know I've given you a lot of information here. We talked about the gap fills and the tradesight pressure thresholds. So if you'd like to get some more information and learn a little bit more about these and how we use these to enhance our trading, please feel free to stop in and take a free trial at tradesight and join us in the lab, and you can ask analysts questions directly. This is Rich Derrick from tradesight. Thanks for listening.